First of all, we'll read this example together and see. So if you see, the question was calculate the total assets. First of all, you need to recognize the what are the different assets, right? What are the different assets? Then question was again asking you, once you calculate the total assets, then you can compute the net asset value for per shares. So with this portion, you required the even outstanding units, right? Outstanding units. Then also question was asking about calculate the incentive fees. Then you required for incentive fees, right? You required base NAV. What was the base NAV, or what is the base NAV? Then high watermark, right? What was the high watermark defined and all, so that you wanted the details, right? So we'll check that whether we have a required details in place or not. If the details is that it is not in place, then that doesn't make sense to calculate high watermark and all, right? So the fund name is GMT Fund Series A Multi-Strategy Fund. See, you would see such a names in your system also. 1, 2, class A, B, C, D. Right? That's the structure. And that's what we have also used here, fancy name, where that same name you might see in your system also. Okay. Then we are assuming this is not a new fund, means it's an existing fund. It's not a new fund, right? It's not a new fund. It's an existing fund. It's an ongoing process that, let's say, just we have set up the separate series for this, and that's the reason. And now the fund started from in a particular duration, and even though we haven't mentioned any closing dates and all, that's what it's an ongoing fund. Let's assume it. Why? If you see the statement, fund accounting start from 1st Jan, so it means every quarter you need to produce. What you need to produce? Trial balance or balance it, right? So you have this data. Okay. Then after here, the units, outstanding units, which is given 100, and the base unit price also given, which is 10,000. So it means 1, 2, 3, 4, 5, 6. This amount would be your capital amount, right? This one would be your capital amount. High watermark given on a base price, so it means high watermark is given on this price, this or this price. So here if you see the NAV, net asset value of a fund is this, then fund will not pay any incentive fees. So it should be this amount. So it means this amount or this either of the one amount that you can see, 10% increment should be there in that value. Correct. 10% increment, it should be there in that value. So let's see whether we have an increment or not. We have a basic details to compute the total assets as well as to compute the net asset value for per units also. We have a few transaction details. See guys, this comes under your trade processing or transaction processing, pricing. All these activities comes under trade processing, settlement, even though Recon, right? Accounting entries preparation. So next assignment would be same data that you need to prepare the accounting entries for each and every transaction. Next assignment would be instead calculation. I would ask for accounting entries that you need to prepare the accounting entries for each task. So you might see slight change in the this amounts or maybe some points. here, but next assignment would be also on similar line, but with that would be with regards to the accounting entries. Okay, so let's start then to compute. I'm recording this, so I would just request you to pay attention. Okay, don't write anything here and there, just pay the attention and try to understand it. So the first line was investment in Google stock, right? Let's say this is your balance sheet. Balance it, right? So in your balance sheet, so you, of course you would see two sides. Two sides means two sides. So we have a one board. So I'll first of all compute assets and then we'll jump on liabilities. So I'll take here assets. Assets balance. Assets should be your debit balance eventually, total assets, right? Here we are calculating NAV, so it means we'll always consider the fair value, right? We are calculating the NAV, so it means if you see with the investment in Google stock, so if you see that portion, investment in Google stock, so they have mentioned about USD book value and market value. So which value will consider for NAV? Come on. Book value and market
Value. Market value.
because it's a fair value. Who provide this value? Of course, pricing team. Pricing team, they provide the fair value of securities, right? And that's what you need to here try to understand if there is a difference between book value and market value or book value and fair value. So it means the difference should be your unrealized gain and loss, right? And we have a equity. On top of that equity, we have a mark to market pricing indicator. Mark to market, it means that equity's value would be based on fair value through profit and loss. Whatever change would be, that change you need to record it somewhere. That change you need to record it somewhere. You will have two options. One, you can directly take the market value and that's fine, or else you can record the you can record the assets with actual cost, and whatever difference would be, that difference you can record it separately as an appreciation, or either depreciation. But let's, to save time and all, will take the market value only, but that's what I just wanted to brief you about, why we'll take and how we'll take. Okay, so here we are talking about investment in Google stock and the value which we have. So directly that you can say stock investment then, right? You don't need to brief anything as such. Stock investment so the value is 120000. Need to consider market value or fair value. It should be calculated on the basis of fair value. Then we have treasury bills, investment in UST bills. So you can say investment in GSEC, right? Investment in GSEC. Total investment we have 451,000. Then other one like hedging through the options. So it means that would be your current assets eventually. Option contracts 5820. Then interest on collateral receivables. Alright. Interest on collateral. Interest on collateral. 2510. So here again kind of this fund, let's say this was feeder and invested in master also. Some portion that they have invested in master also. And that's what here if you see they have mentioned about investment in the Plurish fund, right? Investment in Plurish. It is another fund. Plurish fund 57800. 57800. Prepaid fees. Prepaid director fees. Prepaid director fees 5784. 5784. Then dividend receivable. Dividends receivable 6884. 6884. Dividends receivable. Then interest receivable. Interest receivable. How much? 7454. 7454. So now we have here like net loss, right? Net loss. We will have two options to record that net loss. Correct? So just memorize the nominal account. What the nominal account says? Come on. What the nominal account says? Debit.
Debit expense and loss.
Expense and loss. Credit. Income and gains. So if you remember, I told you asset side, it means your balance sheet asset side would be your debit side, right? And income and gain or this whatever credit side would be your liability side. So if you have a net loss, as per this rule, you should record it to the debit side. Correct? You should record it to the debit side. Yes, no, maybe. So it means you will have options. One, you can directly record it to the asset side as you have a net loss, or else you can just offset here. So it means whatever the shareholders value would be, so you can directly debit that or deduct that from the shareholders value, whatever shareholders value would be, so you can debit that from the shareholders value. So anyway, so whether you do this in this way, or you can just adjust that with the shareholders equity, so there won't be any impact as such. It is just the allocation of that net loss and income, right? It is just the allocation of net loss and income. So when you add, or when you minus or subtract or add to the shareholders equity, so that would be the part of your allocation. That would be the part of allocation. So when you add to the equity, subtract, add, deduct, debit, whatever it is. But when you just record it to the debit side as it is. So this is a normal process. So instead allocation, you want to keep it as debit side, as you have incurred some losses. So that also you can do. So but there won't be any impact due to this. These are the accounting methods, either of the one method that you can choose, and you can record that losses to the either debit side or either credit side. If you want to record it to the credit side, means liability side, then you need to adjust with the shareholders equity value. So that is kind of allocation of expenses to the shareholders account, expense or income, whatever it is. Or else, apart from that, if you don't want to allocate, then you can directly record it to the uh, that asset side, means balance it asset side, as you have a loss incurred from the operations and all. So that also you can do. Anyways, so here we have decided to debit that from the shareholders equity. Here we have decided to debit that from the shareholders equity, because we have a loss, and loss always we deduct, right? So let's calculate the total assets then. Can someone open the calci for me? Come on.
251352.
Total assets, how much?
251352.
251
352.
352. And if you see, your first point was related to the compute the total assets, right? Compute the total assets, and we computed it. Compute the total assets, and we computed it. But the other point was to calculate the per shares. How we can calculate the per shares if you don't calculate the total liabilities of the fund? And at the moment, so liabilities that we have, right? Total liabilities that we have, if you see in a first or second statement, that the given total outstanding units, total outstanding units, compute it into 1000 into 100 into 10,000. So total would be around 10 lakh. Okay. Then the other liabilities that we have, pure liabilities that we have, payable, how much? Payable of 10,000 USD. Then we have net loss. So net loss you can also write it means with the outstanding this units value, but I'm writing here net loss 8745. So net value, that here that you might see change, just minus this value and tell me the net amount if you can. And then redemption payable, redemption payable 7840. 7840. Outstanding legal fees, outstanding legal fees 1542. And redemption payable, subscription in advance, subscription paid in advance, how much? Subscription paid in advance 8795. So can you calculate the total liabilities?
1019 432.
1019
432.
43. So of course we have a means higher liabilities, but higher liabilities in terms of the shares value, right? Because total outstanding capital that we have high, and you might see whatever the difference should be, so that amount you should have as a cash in bank somewhere. Uninvested cash, always that would be in your bank account somewhere, right? Because when we say 10,000 unit price for per unit, 10,000 price for per unit, and we haven't recorded anywhere as a cash. Have we recorded somewhere? No. Right? Then what about the other, means other component or cash? So first of all, you should say, if you have a higher liabilities, and if you have the assets which is not in line with the balance sheet, so it means your first observation should have the assets and liabilities which are not in a line, assets and liabilities which are not in a line. But still if you want to calculate the assets for per unit, so you should define the what is the role of, means what is the difference of this particular assets and liabilities, or else can we consider that whatever the difference which we have as a cash component which is at bank, right? You should question to that. So that's what I just wanted to check it, what you guys follow the methods, how we rectify it, because those challenges you might see while working on the different funds or classes where cash is not there, where the assets or liabilities are which is very high, where you would see the shareholders equities amount is very high. So that will really affect on your balance sheet, and if your balance sheet is not, or assets or liabilities let's say which are not tying, then that doesn't make any sense to compute your assets and liabilities. But still, if you want to calculate the net asset value for per unit, then here if you can just put a logic, whatever assets liabilities, it means you can you can consider this portion as your liabilities, this portion as your liabilities, and outstanding fees and subscription fees. Net loss, that this is from the P&L. So eventually you can adjust it
Yeah.
with this amount. This amount.
Sorry.
Yes, go ahead.
Yeah, I think what's the total liabilities? I have a different figure.
Total
The
liabilities.
total.
This one.
Mm, yeah, I think I have different figure. 8745. Is this added to the total or minus?
This needs to minus from the this amount here. 8745, because net losses or net profits that we adjust with the total units outstanding value. Whatever outstanding
Yeah,
value that you have, you need to adjust here. And
yeah,
net whatever that the contribution would be, total outstanding contribution or units value, that you can update in your balance sheet. All right. But still, if you just
yeah,
ask me, sir, what about total liabilities? If you see, liability has a definition, right? So liability or that balance, it has a definition. Total assets, it means total assets is equal to liabilities, um, outstanding share capital plus your liabilities. That's how we calculate, right? That's how we calculate, and even we compute it. But whatever assets that we have at the moment, 2 lakh 50 or 2.5 million, the assets size we have, and liability that we have around 1 million. Around 1 million that we have liabilities, and around 0.25 million that you would see, or 2.5 lakhs of rupees assets that we have in our books of account. So here, if you have your assets or liabilities kind of imbalance, then that doesn't make sense to compute the NAV for per shares right ahead. It should be in line. It should be in line. It means might be that the cash component is missing from the balance sheet, so which you can add it somewhere in the asset, and then your balances will tie. Or else shareholders equity value that might see, it should have depreciated already. The reason is, this is ongoing the fund life cycle, where we are calculating the NAV for per share. So it means already there should be some depreciation in the that value of the outstanding units, but still we don't see that. So it means this component is missing, that is cash or either from this side, right? So here you cannot calculate the even high water mark. The reason is we have a incomplete information. But I'm just giving you the components, what can be or what should be there. Cash component should be there, so it means the difference of these two you can update asset side as a cash. So whatever cash that you have. Otherwise, if you just, as per this, if you just calculate, that doesn't make sense to calculate the incentive fees. How will you calculate the incentive fees? Because we have this baseline, as we are saying, and asset side we are saying around 2 251,352, right? So total liabilities that we have a high, and total assets that we have a low. So might be, then you would see here, so ultimately the basic value of the unit is not this one. So it should be something else. It should be something else. The reason is, we have assets and liabilities which are not in a balance, or which are not tying. And if that is not tying, then we won't be able to calculate or compute the total assets, sorry, net assets for per units. This is the example of incomplete information. I don't think so even you guys even would have thought about whether it is a complete information or incomplete information. It was the part of incomplete information. You require complete information, but for that matter, your total assets, it should tie with the total liabilities. But again, if you just want to calculate, sir, again I want to calculate my assets because I know my liabilities, then just add this one. You don't need to add this portion at the moment. Just add this portion means this amounts, plus just do it with me if you can. 10,000, do some calculate someone please. 10,000, then plus 7840, then 1542, then 8795. How much?
28177.
Total liabilities 2877.
Sorry, 177.
177, let's say USD. And assets, total assets
251352.
25152.
1352.
So as per the NAV rule, as usual, you can do this calculation, minus total assets minus total liabilities, then
223175.
double two, sorry, double two
3
three
175.
175
Divided by outstanding units.
divided by outstanding units. How much units that you have?
100.
100. Because if you see the definition, total assets minus total liabilities divided by number of units, right? Number of units, and we have 10 units here. Just calculate it. So how much would be your total assets then? 2231.
2231.75.
2231.75.
Fine. This is the GAV, right?
Yes, this is the gap, gross asset value, but eventually in this example you cannot compute the what? You cannot compute the incentive fees.
Incentive fees.
The reason is I'll draw that in diagram so you would be able to understand it. Let's assume it. So this is for your incentive fees calculation, right? Let's say this axis is for your GAV progress means gross asset value. Let's say 0 here, then base was 1 lakh, 2 lakhs, 3 lakhs, 4 lakhs. Duration, let's say quarter 1, quarter 2, quarter 3, quarter 4. And your axis, that is your incentive fee, let's say incentive fees or whatever that you have a gap at the moment, right? So here your gap will start from here, right? Your gap will start from here because this was your original or baseline gap, right? and in between here that it was defined means 10% on your base gap, right? 10% on base gap, it means this amount was the high water mark, right? This amount was the high water mark. But if you see, so NAV started, let's assume it, NAV started, it performed very well, kind of this, but later on again this come down, it means at the end of the quarter one only, let's say this went down. Here also that you would see incentive fees you can't calculate, or even though you can't, or investor they can't pay any incentive fees to you. The reason is this axis or line is for performance of a fund, right? And as per the calculation, that whatever calculated we NAV for per share is NAV per share is around 2, how much, 2 something, 2 to 3 something, right? 2 to 3,
31.7.
31.75 whatever it is. So this one is your NAV. So it means as per your data, this is kind of in a negative way. And who will pay? So now you tell me, investor invested 1 lakh. Investor invested 1 lakh and the value of their investment is at this. Will you pay incentive fees on this? Yes, no, maybe. Will you pay? No, right? The reason is it was communicated that investor will pay the fee on and above this amount, right? This area definitely that would have produced some incentive fees, but after that, due to, let's say, assume it global recession, that particular fund or particular securities, whatever securities that you had or whatever investment that you had, so that is not now with you, or let's say that converted into bad debts, or that vanish out the value of particular securities and all, or let's say it's become zero. So in that case, that doesn't make sense to pay, or no one will pay any incentive fees and all automatically, because if you calculate, we already told about base GAV was this, and now current GAV is gross asset value is 2231.75. so here no one can pay the incentive fees on this GAV, gross asset value of a fund. So it means eventually this should become your NAV, net asset value. But there you might see, if the fund already communicated to the investor, like on GAV they'll calculate the management fees, which is 2%. If they calculate, then again this becomes your GAV, and then 2% management fees will applied on this amount. But your actual, or in a reality, your fund, that performance fees or whatever fees that you want to charge, so that works in this direction, right? This would your high water mark. But now after the, let's say, next quarter, so here might see the benchmark that will reset, high water mark will reset. If that was in a first of all, it should be already discussed with the investors. So every quarter they'll reset the high water mark. Otherwise investors will not agree with the change of the high water mark. Fund will have to provide service to achieve the whatever the base high water mark was given, right? In this pandemic, I have seen lot of things, different funds come up with the different strategies, then they lost 50%, 60%, 70%, then later on they sent later to the investors. Even I don't want to reveal the name of those funds, but even though you go and check the hedge fund news, and most of the funds, like, they are in a loss of up to 57%. Up to most of the funds that I'm talking about, hedge funds, they are in loss because in pandemic they earned well. They earned more than 120% return even during the pandemic. So there were, and few funds that I have seen, like, their value become double, so multiply their value, but now they are in a loss. And if they are in a loss, so it means they can't make any incentive fees. And if the hedge funds, if they are not making any incentive fees, so eventually that will affect on the your salaries, bonuses, everything. And eventually fund managers, they also distribute some bonuses from their pockets to you guys. And if they are not earning any incentive fees, and let's say they are in a loss in terms of, like, they'll not get anything, they are investing their efforts but they'll not get their commission and all, then they will not offer you any bonuses, anything as such. And that's the reason this pandemic, this recession may affect or hurt the sentiments of employees as well. And that's the reason you are seeing a lot of the activities, disruptive activities in finance industry. Okay, so in this example you cannot calculate the incentive fees or even the crystallization point, because the NAV already erode from 1 lakh to 2231.75. so there is a loss eventually. Up to 90% that you would see loss in the NAV. Up to 90%. Around 90, 90 or 78 something, 97, 800 around loss in your that. And how you can adjust this loss? Let's assume it. So there is a loss eventually in the particular value of your investment. Then it's very simple. This 97 you can again allocate. Where you can allocate? You can allocate it here.
Share capital.
Yes,
Yeah.
allocate here. Allocate.
It's in the same way we added net profit with capital, like same way we'll deduct it from.
Yeah, same way.
Okay.
That's what allocation come into picture. What is the meaning of allocation? Allocate the whatever the difference should be, that you can allocate, and then now calculate automatically your netting that would be in line. Allocate, see, ultimately this outstanding units from the investors, and whatever investment that we have, that is also from this particular investor. And if you see the loss in it, then allocate that losses to the that outstanding unit holders only. Allocate it and adjust that value. You don't have any other option. So that's how we compute and calculate. So now you can tally your calculations and see what was your understanding, right? So when we send any examples, so you might see mistakes there, but we have deliberately we have done that. So where you guys can recognize or where you guys can identify, right? Otherwise, simple examples anyone can resolve it. Anyone can, it means anyone. Total assets, total liabilities. That's not the difficult one. But your job is like to even identify what can be the right procedure if we have given any incorrect procedure, or even we have, let's say we have given any incorrect item in your that particular example. So you should identify that from your side and submit it out, the correct one. Not only like sir sent it means everything will be kind of correct and you need to just prepare and send it out. No, because we done that deliberately where you guys need to reconcile it. That was the purpose. Okay, so now I hope you understood, or still you
Yes.
have any question. Okay, so today's topic, that would be almost, I think, 1 hour that we spent, but that was also important to resolve that example. So we just wanted to start with the fund accounting stuff. So I'll just give you the intro. Intro, it means what can be the topic and what would be your next topic means for tomorrow that we're gonna cover or discuss, right? So we'll go the topic by topic wise, so that will give you also even understanding about so how the fund accounting works and all. But before that, let me just brief you about the structure of fund accounting business and what are the different topics that we're gonna cover under fund accounting training throughout our duration. And of course there would be assignments like this that you might see with every topics, few examples or few questions. And as I told you, so after your trainings, please be serious. If you don't submit your assignments, we have a certification, so it means we have designer parameters. So 25 would be your MCQ questions, 25 would be your descriptive questions, and rest 50% there would be weightage for assignments. But only this calculation we're gonna refer. 50 questions, 50 questions into 2 marks, there would be 100 marks test after your trainings, and you should qualify with minimum 75%. Then only we would be able to release your certificates. Otherwise we cannot. And your certificate should be based on trainings or your classes, whatever classes that we have conducted or taken. On the basis of that, the assessment will be performed or scheduled for you. And that's the reason, again I'm reiterating myself, don't rely on recordings. Whatever we discuss in session, note it down, each and everything. I'm trying my level best to record it, and if it is recorded, then definitely we'll upload there. You can also refer that. Don't miss the session. If you miss it, then I won't be able to help you in the assessment. That would be online, and we don't have any retake kind of things. Otherwise you will only get the participation certificate that you have participated in fund accounting training. Right, are you getting me? Any question, any doubt? Then I cannot allow you that the fund accounting certificates, it's a that would be your participation certificates. So think about it, and please be serious about the assignments and everything. Okay, so when we talk about fund accounting, guys, fund accounting, always you need to ensure few things. One is basics of accounting. When we say fund accounting, see, fund or this particular combined word, if you see itself, that defined one word which says accounting and other word says fund. Fund means money, and accounting, it means your golden rules, concepts, whatever concepts that we have, journal entries, group ledger, P&L, balance it, or trial balance. By default that comes, whether it is fund accounting, IT accounting, IT means technology, banking, insurance, right? Just you need to replace the word. If I talk about manufacturing accounting, it means accounting is required for a manufacturing business line. If I replace the word like banking accounting, so it means accounting is required for a banking. If I say fund accounting, so it means accounting is required for a fund, but that doesn't mean your basic structure will change. This is your basic structure. Processing or recording transactions that you might see different, or business transactions, because here we are talking about fund, it means we are talking about money. So it means the business line which is related with the investment. Business line which is related with the investment. And when we say investment, the equity come into picture, because most of the funds they invest into equities. By default, bonds comes into picture. Money market instruments come into picture. Right? Money market instruments come into picture. Equities, bonds, money market instruments, derivatives, FX market. FX markets. These are the instrument where fund raise the money and they invest into this instrument. Right? When fund invest into this instrument, your job is to process money. Means whenever you received money, that received as a cap stock. That receive as a cap stock. Cap stock, it means that receive as a capital stock, and that's what, if you see the when we record the accounting entries in the books of fund, how we record cash and bank account debit to share capital account. So it means that would be a cap stock activity. So we received that money as a cap stock from investor. So it means you need to prepare trade repository for that money received transactions also. And when you received money, then of course, as a fund manager, means fund manager utilize that money, for investment purpose, investment into equities, FX market, bonds, money markets, derivatives. So where the that particular investment manager utilize, it means purchase those securities, invest into it, and they just send the data to their accounting teams. Accounting teams, it means before the accounting. So one task that we are missing here, that is TR, transaction recording. So here we are seeing processing, and same here with this transaction recording. So if you see, just we'll go back with this same example and I'll help you how you can link. So investment in stock, so it means this comes under your transaction recording. You need to record the transaction first. Investment in treasury bills, you need to if you want to do the accounting, then recording of transaction is also important, because those could be your assets, those could be your liabilities, those could be your P&L, and that's the reason you need to record those transactions in the books of fund. And this all activities, means recording of these activities, comes under your transaction processing. So it's a very, very important one. Transaction processing, it means for all financial instrument, you need to process the transactions, and that's the reason under transaction processing, under transactions or trade processing, so you would see multiple activities. One would be your trade processing, then settlement, middle office operations. Why? To communicate with the different counterparts about negotiation and all, right? Or maybe where the coordination is required for settlement and all, right? Then reconciliation, right? So that activities you might see with regards to this investment. And apart from that, if I take the example of equity, then you required how we apply the accounting concepts or golden rules or journal entries treatment to the equity. So requirement is you should know it, how we can apply the golden rules or concepts or journal entries to the equity product. Same applies for FX market. Same applies for a different derivative types. Same applies for a bonds. Same applies for a money market instrument, right? So you should know it, how you can apply the treatment. So there would be two challenges. One challenge would be from a processing side. So you might see multiple activities trade processing, cap stock. When we say equity, then you might see a dividend income process also, or same for a bonds, right? So you might see this where bond pays interest payment. So then your interest, dividend or interest team that come into picture, trade processing or settlement team come into picture. When we say cap stock, it means subscription and redemption activities or transfer agents business activities come into picture automatically. So when we say money, so which is directly your uh, related with the cash component, so it means cash management team come into picture. Right, related to this cash, then you might see, so when we received cash from different investors, then we need to prepare the share registrar book or that outstanding unit holders record also. Then you would see maybe KYC team come into picture where every unit holder needs to perform the KYC on a quarterly basis or yearly basis. Then accounting setup team or account creator setup team in an internal accounting system. So you might see that your asset admin or account creation, asset admin or account setup or KYC, these are the different teams, so that might come into picture when you see this particular fund accounting business. And other side is your accounting. So when you have a data, when you have investment data, then of course you can apply the golden rules, and that's what we covered first two sessions. If you would have attended, then we covered the golden rules of accounting, how you can apply the golden rules, how you can prepare the accounting entries, what would be the impact of accounting entries when you record the incorrect entries in the books of accounts. We'll have accounting entries way ahead also with the different activities for a trade processing, derivatives, income, dividend, and everything, right? You might see that we ahead, but we have basic background that we have discussed about all this. Your fund accounting, it means your this activities, right? But without investment products, that activity become incomplete. And without understanding of trade processing, settlement, cap stock, pricing, dividend income, corporate action, and their different rules, again this activity become incomplete. And now I'll come to the main point, why this fund accounting is difficult. Because try to understand the challenges. Most of the people, 90% population, they are not familiar with the accounting. They are not familiar with the accounting. Again, same 90% population that I'm talking about, they are not familiar with the product also, how the derivative products is work and how we can record it, or what would be the different benefits that we can record it about derivatives in the books of fund. So they are not aware about it. And third challenge would be in terms of processing, how the trade that we process in our system, how we can settle the trades in our system, how we calculate the dividends or interest payment, how we price the securities and we record it in the books of account. So those are the challenges, right? Those are the challenges, and that's what fund accounting become complex. Fund accounting become very complex, right? But don't worry about it. So I'll try my best to explain this fund accounting or teach you fund accounting in a very layman way. So you guys can pick up some insightful content from this or during these trainings from a different task or activities that we're gonna discuss, right? And I'm sure after this you would be able to reconcile all the positions or stock or investment, whatever that you have or wherever that you guys are dealing as a fund accountants. So you would be able to, and apart from that, of course, all these insights or information will help you to even crack the interview also. So here what we required is your attention, and let me just draw the diagram so which you can refer that as your questions even. So sometime you may expect question like NAV package, do you know about NAV package kind of, and then after we'll stop here. So your fund accounting, different activities that come into picture. Let's say subscription, not subscription, I'll say cap stock activity. This diagram you can write it down, cap stock activity, where you would see subscription redemption, and in P that you would see capital call, capital call, and capital call and distribution call. Capital call and distribution call. Alright, so that comes under your cap stock activity. And then other one would be your trade processing. When we say trade processing, by default your trade settlement come into picture, okay? Here you would see activities, middle office operations, right, where they provide cooperation and all in terms of processing or recording or calculation or negotiation part of trades or different fees and all, right. Then your middle office activities come into picture, as well as back office activities come into picture. But here, so you might see other different activities also, like Recon, right. Then with Recon, so you might see here security setup in system, right. So those would be the prime activities. So you might see that also, okay. But what we want to exactly do here as a trade processing, so buy and sell, simple two activities that you would see. In short, buy and sell of securities. Buy and sell of securities. Then corporate action and income processing. So I'll just brief in two ways. One which is action on security, action on securities, for example, let's say stock split, right. Another would be distribution of or income distribution. Income distribution, right. So that comes under your corporate action. Income, it means your interest, including interest payment or everything other components as well. So we'll see that, means under that particular activity definitely we'll see that. Then your pricing. Pricing, it means different methods that come into picture. So how we price the securities, right? How we price the securities. So all these basic activities that you required, cap stock activity, trade processing, settlement, MOBO, corporate actions, income processing, right, pricing. So you might see different other activities also, like particular, compliance or other reporting activities, or let's say that investor account setup or security setup accounts also, the way like under trade processing. So you might see security setup, so you might see investor or account or fund name for fund account setup activity also, right? So those activities that might see, that comes under your accounting, fund accounting, NAV package. And of course, apart from this, your accounting. Accounting, when we say accounting, you can refer this. You can refer this for accounting, right? So take this screenshot of this and keep that with you. Already I have added you one SOP, so I would request you to go through that SOP, please. So it's a very important one. Just go through that SOP if you can. And see what you see different, or whether you guys are aware about that portion or not. Just go through it. I have added you 2 SOPs in the course, or I'll add that SOPs in your March batch, so it will easy for you to access. Those are SOPs, it means those are practical SOPs, funding with a fund example, right? Just go through it, check that how the different funds you would see in system. So that we tried to brief it. So refer that. So from tomorrow onward, that your first topic would be your cap stock activity. So don't miss that. So we'll start to the cap stock activity discussion, or before that we'll discuss other background also, and of course accounting entries and all that. By default it would be there, or impact of those accounting entries on balance sheet and all, also that would be there. So be there, attend all the sessions. We'll try to record as much as we can, but apart from that, I would say just you also be there. Okay.